Hello everybody, welcome back for another video. Hope you're all doing fantastic and that you're all having a great day. Leaving a like or commenting is very much appreciated as it does help with the channel's ranking on YouTube. Another really weird news day. It's always, crypto's never not weird, so yeah. For those of you not looking at the screen, it says Bitcoin dips below $17,000. Ethereum loses 6% in a day. The cryptocurrency market took a beating, and that's kind of intense, in Friday's trading session, shedding upwards of $20 billion in 24 hours as Bitcoin dipped below $17,000. Yes, all markets right now are low, have been falling over the past 2 days, more or less. Of course, there are reasons for this. It has nothing to do with bears or other animals who are outside fighting. There are, of course, other things happening in the world that are causing these movements to take place. There was, regardless of the prices falling down, it was actually very, very little news of the prices falling down. A large portion, at least of the price news, had to do once again with accumulation. For those of you who have not been here the last couple of days or even the last couple of months, as prices have been falling, we've gotten tons of whale accumulation news. That is to say that as prices are falling down, people who are whales, typically considered to have access to millions of dollars at their behest, are buying up huge amounts of cryptocurrencies once again as prices are falling. It says crypto whales are massively accumulating stablecoins, and Bitcoin data is showing. Blockchain data shows that cryptocurrency whales have been massively accumulating stablecoins, including Binance's US dollar, DAI coin, and Tether, all while Bitcoin whales have been adding to their chests at the same exact time. According to on-chain analytics firm Sentiment, Bitcoin addresses with between 100 and 10,000 Bitcoin have purchased a total of $726 million worth of Bitcoin over the last 9 days alone. This is quite common news. It happens all the time. I mentioned before, I'm not sure how many people are here for the first time or are relatively new into crypto, or if this is your first downtrend over the course of a year in prices. This happens all the time. We are currently logically in accumulation mode. Bitcoin and other cryptocurrencies are extremely undervalued right now. That's not me saying that because I want prices to go up, which I do. It's just more of a, if we hit other prices before when adoption wasn't as high, and we've seen a 2 or 3x in adoption, but prices are 1/8 where they were before, logically, we should mathematically be a lot higher in price. A lot of price predictions floating around. It says Bitcoin price prediction as Bitcoin completes a 61.8% Fibonacci retracement. Is it time to buy the dip? It depends on who you are as a collector or as a buyer or as an investor. I buy all the time. I don't care where prices are, how low, how high, where they are. I'm constantly buying, because I do believe at some point we are going to have normal looking prices where Bitcoin is over $70,000. We have over a $5,000 Ether. It just seems completely logical to me. But a lot of people are now looking at the charts. There's the Fibonacci charts. There's the Wyckoff charts. There's the Plan B charts. Everyone's trying to look for an answer somewhere within the chaos and the madness. And the answer is always in the exact same place all the time. If you've been following the channel, you know exactly where this is going. For those of you who missed it, the European Central Bank has raised their interest rates by 0.5%, the same exact thing as the Federal Reserve. The European Central Bank has joined the US Fed and other central banks around the world in taking action against inflation on Thursday by lowering the pace at which it is increasing interest rates. In an effort to combat the high costs that are weighing on consumers, the central banks of Switzerland, the Eurozone, and the United Kingdom all raised their interest rates by 0.5 points as well. The European Central Bank interest rate now is at 2%, up from 1.5%, the highest level since 2009. The bank has signaled that it is planning to increase interest rates further since inflation is expected to persist at abnormally high levels for too long. I find all of this so fascinating that the people who destroyed the world are the people who are now like, we can help you, we can save you, we can make sure that everything gets under control. One of the more and I was surprised at this, one of the more popular news stories of the day is that the European Central Bank actually raised their interest rates, as did other banks around the world, all announcing that they want to stop inflation, that inflation is too high, they need to get things back under control, etc., etc. Of course, this all had a major effect on world markets. On the news that the Fed raised their interest rates in the European Central Bank, the Switzerland Swiss Bank, good job, and also the UK Central Bank. Basically, all world markets began to tumble. Everyone was kind of shocked or alarmed that this happened. They weren't expecting it. This is like our 9th time this year that this has taken place, but for some reason, people are still pretending like they didn't know. Like even on Wednesday, we had news. No, was it Tuesday? We had news that the Fed was going to raise interest rates, and they were going to raise it by 0.5%. Markets skyrocketed. They began to pump like crazy on the optimism that they were not going to be raising it by 0.75%, but 0.5%. And then on Wednesday, when they did it, markets collapsed as if we weren't just told that they were going to be doing what they said that they were going to do. So, cryptocurrency markets are down. Stock markets around the world are down. The people are still throwing around the recession word. I think a lot of people who are doing that tend to be, at least from what I'm seeing, tend to be very high net worth individuals who are probably trying to scare people out of the market to lower prices to get stock valuations at a lower number so that they can accumulate at a lower price. The same exact thing happens in every single market. It's a form of legal market manipulation where you as a company, if you are large enough, can go on television and say that we're thinking about selling. We're not too bullish or optimistic. People listen to your words. They sell off what's going on. It's the general cycle of things that we are in. So if this is anything like the 9 other times before this year, by Monday, prices should be back up just based off of general optimism until the next time we see that there's going to be another interest rate hike. I assume maybe at this point, gigantic question mark, that markets may not move properly in general until we get news or indications that the Fed is going to stop raising interest rates. People are still looking towards the March timeline, but now at the point that so many people have been saying March, and March is constantly a thing when people are going on TV and the stock market, it leads me to believe it's not going to be March anymore because everyone keeps saying the exact same time frame. The Fed got us into this mess. They keep acting like they can get us out of it. Inflation has fallen by 2.9% in America. It is still up above 7.1%. A lot of stores have doubled or tripled their prices and things aren't looking too good. So it's clear that the Fed can't get it under control. I think like a literal shock to the system would probably be a lot more effective if they simply just announce that they're going to be raising the interest rates by a good 3% in January so markets can collapse. We can all deal with it. Inflation does actually go down immediately, like the shock of the event. And then by June, July, we're all moving back up again. But that's a little bit too logical. And that's, it has to be drawn out for maximum pain, as they say. That's all the price news that we have right now. I guess rest assured that whales are buying up all of your coins that you're selling. So when prices do go back up, potentially sometime next year, expect a huge amount of newly minted billionaire news because that's also part of these cycles as well. That's the price news. And yeah, let's move on. In very big news, this is becoming a major topic of discussion. It says, while Binance's CEO Changpeng Zhao is trying to calm crypto Twitter about Binance's financial health and withdrawals, It says Binance FUD seems to take more time. The idea of FUD, for those of you who don't know, is something that, and I'm trying to be nice every single video, but you have to understand, I hate stupidity. The idea of FUD, it's a term that people use when they think that something that they heard doesn't sound right, and therefore they automatically assume that it has to be fake and that someone is trying to discredit something that they believe in, even though it might be fake or wrong or being a lie. You know, it doesn't really matter what the actual topic may be. So years ago, there were people who were, I remember when the term FUD really began, and people were talking about that Ethereum as a network wasn't that fast, which it's not. I think maximum, if you really push it, it can get to around 15 transactions per second. And a lot of people who believe in Ethereum more than Bitcoin began to call it FUD. They were like, well, the network's strong, the network's so-and-so. And it's like, yeah, but them saying an actual fact about something is not FUD. It's not fear, uncertainty, and doubt if this thing is actually applicable to the current situation. But people use the term FUD as a way to discredit anyone who might have actual information about something that might be going on. But if you don't want to hear about it, you simply scream FUD and just assume that it's going to go away, because if enough people scream FUD, then it has to be fear, uncertainty, and doubt. Someone's clearly lying to everyone else out there. Binance's CEO has assured everyone that their funds are safe and claimed that the stress test that they're currently going through actually helped them to build trust in their customers and the crypto community. On-chain data has also indicated that no FTX-like behavior is going on. However, uncertainty in the crypto market continues to persist. Glassnode, one of the many companies who looks at on-chain data or information from cryptocurrency exchanges to be able to ascertain what's going on with them. They have data over the balances held by Binance, estimating that there are a total of 584,000 Bitcoin. 584,000 Bitcoin. Whereas Binance the other day declared 359,000 Bitcoin in a self-reported proof of reserve wallet. The difference is nearly over 200 Bitcoin, which is roughly around $3.5 million. And here's a little chart right here from Glassnode. For Ethereum, the on-chain balances reported by Glassnode are the same as those reported by Binance in their proof of reserves. We're currently going through a situation where, and Binance is still the only one to do this. Binance is the only company thus far who has announced that they have shown information for how much Bitcoin or cryptocurrencies they actually have on their platform. A number of companies are allegedly looking into Binance's self-reported numbers. Now we're getting information that their audit was done by them, which is not how an audit should be done. You can't tell someone that you're doing fine if you haven't gone to the doctor. You need a doctor to actually look at it. You need an outside information to be able to come to a certain conclusion. So Binance is a large number of coins continue to leave Binance even right now. And in the wake of all of this and the confusion that no one has any accurate, and I air quote there, accurate information as to exactly what's going on, a lot of people are pushing back because Changpeng Zhao has been writing and telling people and going online that they should not be self-custodying. Now, here's the kicker right here. The idea is, for those of you not looking at the screen, it says Binance's CEO does an about turn on self-custody, saying 99% of people will end up losing it. The idea being that if you self-custody your coins, you're essentially, this isn't a joke, that you are essentially too dumb and you are going to lose the coins that you have. Why is this interesting? Because he's announcing this as people are taking their money off of his exchange and actually self-custodying them. They're putting them onto ledgers and other cold storage wallets to have control over their own money. But because this money is coming from Binance, he's now telling people are going to lose it if you try to do what Binance can do for you. Yeah, see, kind of weird, right? So a lot of people are now pushing back at him on social media, and even before so, for those of you who missed it a couple of weeks ago, when the entire FTX fiasco began, he began to tell people one of the safest ways is to actually have your money on a ledger, a cold storage device, what have you. But now that money is leaving from his cryptocurrency exchange, he's now telling people don't take the money off, or air quoting here, Paraphrasing, if you will. Don't take the money off, because if you do it, 99% of you will lose it. Right. So this major news story, people are trying to figure out exactly how much money Binance actually has on their website, basically because they were the ones to announce it. For those of you who missed it after the FTX collapse began, Binance was the first crypto exchange who announced that they would be showing proof of reserves. Here's how much money we have. We definitely have all the money, etc., etc. I think it would have just been better if they didn't say anything at all. People always forget. People forgot about Do Kwon, and people forgot about the Terra Luna collapse. So I think in 3 more weeks, people would have moved on and not even remembered that self-custodying would have been a better option for all of this. As it stands right now, it doesn't look like from all these companies that anything FTX-like is happening. I didn't assume that from the beginning. Whoever threw that around, stop making up nonsense to try and scare other people. But if you tell everyone that you're going to show them how much crypto you have of their own money, and then you do an internal audit of yourself, people are going to be asking questions. Also, no one else finds it weird that he's panicking now, telling everyone else that you're going to lose your money if you don't have it on an exchange. Self-custody is not that difficult. I told you in many videos, I have multiple ledgers. You plug it into the computer, you set it up, you literally copy and paste the address. It goes, okay, your money's on the ledger, and you unplug it. That's like saying you having your backups on a USB or a hard drive, and like 99% of you would lose it. Why would you be losing it? It's some kind of fear, and it's not some kind of fear. It's a fear that he knows that people are starting to realize that cryptocurrency exchanges might not be as truthful as they claim, and people are taking their money off of it. Anyway, that's the Binance reserves news. And also, 99% of people are too stupid, apparently. Thanks, Changpeng Cao. Let's move on. Also I thought this was a joke, and then I was like, no, of course it can't be. Donald Trump released an NFT collection, I believe it was yesterday. The reason why I thought it was a joke is because if you haven't been here since around 2017, it definitely wasn't 2016, it was 2017. Donald Trump and nearly every other politician in the United States hated Bitcoin. They hated crypto. They said it was for criminals. They said it's a scam. They said it's the worst thing. And I'm not joking or even paraphrasing there. This was around the time when Warren Buffett really got into it, talking about how bad crypto was for society and for people. So the idea that there would be any foray by the former president into the cryptocurrency space just seemed a little bit weird to me. But nope, it's actually true. I think there were 45,000 additions. I think it took about more than half a day or something like that for it to sell out. It looks like AI generated versions of Donald Trump. There's gold bars behind him. He's wearing a suit. He's wearing a space suit. I don't know. I can't tell what that is. Like, I honestly can't tell what that is. He's some kind of a helmet, and there's a moon behind him. There's one of him as a cowboy. There's one of him on an American football field. So apparently they sold out. I think he made $4.5 million. And yeah, I think the floor price, I think this is from what I'm reading around, the floor price has already collapsed, and yeah, something like that. So this was also relatively big news. Apparently people were buying them up like hotcakes, as the saying goes. Let's see what happens. Sure, this was very popular. I'm sure a lot of people were buying them. Who knows what the future holds for all of this. So that's the Donald Trump NFT news. Also in This Was Popular and Should Not Be Popular news, it says, as per the latest development, a pair of Hong Kong exchange-traded funds investing in Bitcoin and Ethereum futures raised $79 million. This means Asian crypto investors are to get their first listed Bitcoin and Ethereum futures ETFs. So for those of you who weren't here years ago, the amount of news that floated around about the idea of Bitcoin ETFs and Ethereum ETFs was absolutely monstrous. But the SEC is far too corrupt to actually allow any of those to go through. And I assume because of the entire FTX collapse, we will not be seeing a Bitcoin ETF or an Ether ETF in America in the next 3 to 4 years. But rest assured, for those of you who have ever taken a plane before, the rest of the world still exists, and we have multiple Bitcoin ETFs here in Canada. The news is that a lot of people have grown impatient when it comes to America trying to get a Bitcoin ETF or an Ether ETF, so now they're launching futures everywhere. But the issue is that futures are mainly only meant for people who are trying to bet against the price of the cryptocurrency market. They're all denominated in US dollars or the local currency. This was popular because a lot of people, whenever there's news about futures launching that involve the cryptocurrency space, a book just fell off of my table and I don't know how. There was no one there. I didn't touch it. Like, it completely just flipped off the table. Okay, well, there's a ghost in the house. The other part, I'm like waiting for the book to move by my feet. That's very, very weird. So anyway, the point is, the idea of futures, how do I say it very quickly? A lot of people get very excited whenever there's like a new thing that is attached to cryptocurrencies launching somewhere in the world. But futures are always, usually, generally, they have to do with like trying to lower the prices of cryptocurrencies. So I don't know. But this was also very popular news. A lot of people were talking about it as if it was something great. Nope. Hong Kong was also recently in the news a couple of days ago talking about that they were going to be trying to allow normal people to also be able to trade cryptocurrencies and start cryptocurrency mining and all this other stuff. I don't think it's going to happen simply because the country that is above them is rapidly trying to gain control over their territory and land. And usually what happens above tends to also happen below. That's the Asia is getting its first Bitcoin and Ether's futures ETFs news. Fantastic. Sure. I assume people will only be shorting it like they always do. Moving along. Also, in like unpopular news, but I kind of get it, European Union regulators have set out how to apply to run a financial market-based... What? Oh, there we go. To run a financial market based on distributed ledger technology, clearing the way for a new pilot regime to start next March. Lawmakers in the bloc, BLOC, reckon the technology underpinning crypto could cut out middlemen when trading financial instruments such as stocks, bonds, and other securities. But there have been concerns about whether regular retail investors will be able to access the benefits in practice, especially as they'll need to take a test first. So without having to go much further, and I've heard nothing else about this or even how deep this is actually supposed to be. Apparently, the idea is that the European Union is trying to get a union-wide consensus that if people want to open up businesses, or if people, regular people, retail, want to get into the cryptocurrency space, that they need to take a test first. I'm not sure how that's going to be implemented. I'm not sure at all that every country is going to agree with it. Usually when there are regulations similar to the United States, European Union countries can kind of decide if they want to go along with said kind of thing. I think there would be an immense amount of backlash if they tried to get people to take a test, normal people, to be able to see their level of knowledge before they got into the cryptocurrency space, simply because they don't do this when you get a mortgage. You can get a 30-year mortgage and no one gives you a test before seeing if you understand how the mortgage is going to work. You can go and buy gold and silver, which hasn't moved in price relatively in the last 10 years or so comparative to the cryptocurrency space, and no one gives you a test before you buy gold or silver. You can open up a stock trading account and you can buy, sell, and trade funds and stocks, but no one gives you a test for it. Like not even as the app loads up is there like a preliminary kind of thing. So this was kind of floating around. I understand the idea of it, And I think it's not even completely a bad idea depending on how far you wish to enter the cryptocurrency space. I.e., if you are just trying to buy, sell, hold Ethereum, Bitcoin, XRP, Litecoin, doesn't matter which coin, that's completely fine. But I think a lot of times there are coins that are riskier in the space that people keep getting into and they don't understand the actual risks of them. Depending on name a coin and throw it inside there into the bucket that collapsed this year or the year before or the year before that. A lot of people do get into the cryptocurrency space thinking that it's like a get rich and I get rich quick. That's the definitive word. And for those of you who've been here for a while, know that that's not at all how the market works. It takes time and effort. You have to buy certain particular coins, and you have to basically know what you're doing to be able to make the big money once the market actually ends up going back up. But a lot of people do, and this is the problem with, and I air quote here, the problem with retail investors is that every single year, every time that there is a pump in the market, these people flood into the market trying to make very quick, fast money. They put $200 into the market, expect it to go to $1 million. Prices at some point collapse, as they always end up doing. And then we end up having all these lawsuits filed against Ripple and against Ethereum and against other company because these people thought that they could make money really quick because they didn't understand exactly how the market works. So it does make sense in a particular way, as long as it's not something comparative to what Russia was trying to do or what the Southeast Asian countries were trying to do, where they were basically you have to be worth a certain amount of money to be able to even get into crypto, which is incredibly dark and dystopian, but that's another entirely different conversation. So reading through all of this, it appears that they're trying to finalize this. This is not anything that is written in stone, but also every single country will be able to say yay or nay for this. I assume any country that says yay will get the people from the nay country moving over to them because there's free movement within the European Union. So they'll simply just leave that country and go to the other country that will allow them to make money. Just completely logical. That's the apparently rules and regulations are coming for the EU sometime in March. We'll see how it works out. Usually these things end up collapsing. It's always someone who has like a very vague, weird idea of what should be happening with some financial market. They usually have no idea what they're talking about. And yeah, let's move on. In terrifying news of the day, the U.S. Department of Justice has appointed a creditor committee, and Sam Bankman-Fried is filing for bail. The U.S. Department of Justice Office of the U.S. Trustee has appointed a committee of unsecured creditors to represent FTX account holders and other creditors in the bankruptcy case of the collapsed crypto exchange. So basically, they're trying to get people to represent the larger group of people who lost their money in the collapse of FTX. This is very big news. This is probably going to take a very long time, and it's probably going to be very similar to the Mt. Gox thing, and that it's going to take 3, 4, 5 years for any of these people to get their money back, because that's what always ends up happening. It takes a very long time. It's a very long court case. People have to go through all the files. The court case usually takes around 2 or 3 years. They come to a decision, and then they have to actually figure out how to get people back their money. If the cryptocurrencies are gone or locked away or stolen, you can't materialize Bitcoin and then give it back to people. That's not how it works. And if it's anything like the Mt. Gox situation from years ago, part of the problem with Mt. Gox was when the hack happened, Bitcoin's price was like $10, $15, $20. When people were able to get their money back, those coins were then worth, $13, $14, $15,000. And the government did not want to give them back, those coins. They were trying to give them the monetary value of what they lost years ago, i.e., here's your $3,000 back, as opposed to here's your $4.7 million. So let's hope that doesn't end up happening as well. FTX is trying to sell a lot of their companies, I assume, to get money to pay back their debts. It says FTX wants to sell LedgerX, Japan, and European platforms that we heard from before. I assume they're losing money. I assume not much money is flowing to them because they are apparently the worst thing in the entire cryptocurrency space right now. So the news is, and I don't know why this was major news, but that they're trying to sell off their platforms. I assume we would all be doing that because I think the news is that they owned over 100 different companies, as every company does. This isn't a surprise. There was other news that I don't have here. People were looking into their holdings and they hold over 100 companies. Yeah, have you looked into how many Google has or Amazon? They own thousands of companies. Have you looked into, I think it's Purdue and another meat company in America. They own every other meat company in America. You're given the illusion of choice, and they're always just owned by a couple of people. Even like the news, especially in America, the news in America, I think, is owned by 3 families who control 95% of the media. So, yeah, illusion and all that. It says Amber Group is raising $300 million to recover from the FTX contagion. The amount of companies who in no way, in some sort of way, maybe in a tiny way, were relatively or not at all affected by the collapse of FTX are announcing that they need money, that they lost money only because of FTX, or that the market is down because of FTX, and therefore they have to raise some kind of money to be able to float. So Amber Group is raising $300 million to recover from the worst thing that's ever happened in the cryptocurrency space. Reports are suggesting that Caroline Ellison is working with the feds, that is to say the federale, and snitching on FTX co-founder Sam Bankman-Fried. There's nothing substantiated about this. The news is floating around that this woman, who apparently was allegedly the head of Alameda Research, and that her and Sam Bankman-Fried were dating at some point. Apparently now she might be allegedly trying to get a plea deal or something like that. It seems, sure, why not? It seems believable, but do we have any of this information? No, because we're not the feds. We're not sitting in the room with the feds. We're not this woman. We're not her friends. We know nothing about her except for the fact that she wears glasses and keeps taking like really weird selfies every single time that they show her on the news. So this was also quite popular because the idea of the jilted lover now snitching on you is just something that a lot of people want or need to hear. I'm not sure exactly what it is. There's a major uptick in the amount of snakes within the cryptocurrency space. A lot of people are now announcing that regulation is the only way for Bitcoin to ever get back on track, for Bitcoin to actually move back up. I told you to pay attention to this a couple of weeks ago, I think the first week after the FTX collapse, because a lot of people within crypto, not outsiders. Outsiders never like our space. It just kind of, goes with the territory. A lot of people within crypto who are famous people, well-known, they're traders, people who left the old markets, yada, yada. They all a lot of them began to announce that the only way for Bitcoin to have any kind of future, the only way for Ethereum to ever really get it together is for us to have regulations. They're not talking about actual regulations that are in place to help and protect people. Their idea of regulations is basically to make us the exact same way that the old financial system was and or is. The idea being you need gatekeepers, you need safeguards, you need third parties, you need all these other things in place to be able to make cryptocurrencies actually legitimate. But part of the problem, no, the entire problem is we would be no different than the old financial system. This is part of the problem when we see that the stock market goes down and we also go down. There's meant to be an inverse correlation, but there isn't. These people now calling for regulations are, to me, I'll use the word toxic. That's the nicest word that I can drag from my brain at the current nice moment. Because the idea is for them to be able to profit more. It has nothing to do with the growth of the cryptocurrency space, with getting more people into the space, with people knowing or understanding that around the world that they are freely able to use cryptocurrencies regardless of what anyone or any government or any country is actually saying. That's not me raising my hand in protest saying revolucion. It is simply me stating the actual obvious. The point of Bitcoin, and therefore I would even also drag in a portion of Ethereum, is to be used by anyone at any given time, wherever they want, however they want. You should not have to go to a physical store or a website to be able to send money to your family in Africa or to Southeast Asia or to Canada or to Japan or anywhere else on the planet. You should be able to do so peer-to-peer with your family whenever you are feeling like it, to be able to transfer money. That is how money should work. The idea of all these people now coming forward saying that Bitcoin cannot survive without regulation is another mimic of 2018. In 2018, one of the most disgusting things that took place was Coinbase, Kraken, and not so much Binance, at least at that point, and the Gemini twins all openly announced that everyone who was into cryptocurrencies were basically garbage and that we did not matter. Those were the retail investors, the everyday normal people, and the only people who mattered, you must remember this if you've been here since 2018, the only people who mattered were the rich people, that we needed regulations, we needed things in place to be able to let rich people accurately and securely be able to invest in the cryptocurrency space. I told you in those videos, this was absolute nonsense. It's a ploy for all these people to try and get richer for themselves, because they do not care about decentralization. They do not care about you. They do not care about us. They don't even care about the cryptocurrency space, which is one of the worst parts. The people who run the cryptocurrency space are acting as gatekeepers. They are trying to tell other people how things should and should not be used. This is why you are hearing that 99% of people who self-custody are going to lose it. Why would you say something like that? Because you realize that your business is large enough that you are going to lose money if people actually follow the original idea of cryptocurrencies and Bitcoin. Cryptocurrency exchanges were not invented by Satoshi Nakamoto. The biggest and earliest, largest at that time cryptocurrency exchange was Coinbase. It was the idea that people are too dumb to be able to hold their cryptocurrencies, and this is how it works, by themselves on their computer. Therefore, use Coinbase. We're easy to use. We look like an amazing platform, and your money will be safe here. Why is it safe here? Because the more money you give to us, the bigger our company grows. The bigger our company grows, the quicker we can go public, and we can make more money off the backs of other people who are holding their coins on our platform. When people began to take these coins off, the cryptocurrency exchanges began to panic and tell other people, don't do that. We're safe and secure. Look how many pieces of paperwork that we have. You can definitely hold your coins with us. Regulation is not the key to Bitcoin moving up in price. Regulation is not the key to a safer cryptocurrency space. The way that we get to a safer cryptocurrency space is by due diligence and by calling out the excuse my French here, by calling out the a-holes who are in the space. You know who they are. You watch them on YouTube. You know when these people are scamming you. You watch them on YouTube. You watch the people actively tell you on Twitter when you should be getting into a crappy coin, knowing that they're lying to you, but you believe that you are at the top of the pyramid and you will make out like a bandit before everyone else. If we keep allowing these people to thrive within the cryptocurrency space so that they can twerk in Louis Vuitton suits on stage at events after they've taken $1.5 billion from other people out there, well, what do you expect is going to happen? We're going to have the same loop over and over and over, where prices go up, prices crash, and everyone sits there crying and goes, I don't understand what's happening. Do we need regulations? No, we don't need regulations within the cryptocurrency space. We need actual due diligence, but part of the problem is that people don't want to do due diligence. People don't want to do their own research. People don't look any further. And this is why the entire original idea of Bitcoin has been destroyed. Completely gone. And it no longer makes any sense. And then once again, I tell you this and I tell you this now. We are going to live in a world in 10 to 15 years. If Bitcoin is over $1 million, all the richest people on the planet right now will be the richerest people on the planet. They will have all the Bitcoin, they will have all the Ether, they will have all the XRP, they will have all the Litecoin. And everyone else will sit there complaining and wondering, why am I not rich like them? Why do they have all the money? Why do they have all the power? It's because of things like this. We keep letting these people into the market. Who was that guy a couple of months ago, or even a year at this point? This guy, forgive my French, pooped all over the cryptocurrency space for 3 or 4 years. He's some famous internet personality. And then he announced he was getting into crypto and everyone patted his back. And I was like, this guy told everyone not to get into crypto years ago when you could have gotten it at a much lower price. And that's how it always ends up working. Pay attention to the people who are asking or begging for regulations, who are saying that we need regulators to come into the space. This also only makes me further believe that this was all coordinated, that this was all done on purpose to be able to kick people out of the market, to kick normal people out of the market, and to make sure that regulations do come. Doesn't it seem weird how focused everyone is on this one particular event, and now they're screaming for regulations? Pay attention to what's happening. Also in the news, it says Silvergate is facing a class action lawsuit over FTX and Alameda dealings. A lot of the companies who at some point dealt with FTX or were working with FTX or had money with FTX or said the letters FTX out loud, who knows, they're now being sued because the customers who worked with them claim that they did not know that they were working with FTX and also did not care. We go over that all the time. People don't care what any company or cryptocurrency, anything is doing, as long as they are making money. The moment they are not making money anymore, people begin to panic and begin to scream and talk about just how terrible and awful everything is around. So that's the Silvergate news. It says, are U.S. banks freezing FTX-linked bank accounts? Probably. That's usually how it ends up working. They usually freeze assets of companies or institutions who have, air quotes, done something wrong or are found to have done something wrong or whatever the case might actually be. So yeah, I would assume if U.S. banks aren't actually freezing FTX accounts, that's probably going to be an issue. That's usually how it works, and usually how it works with sanctions or U.S. territories. So I would only assume that they're doing so. U.S. Senator Toomey, that is Toomey, explains why FTX collapse does not justify banning crypto. This is one of the most logical things that I've actually heard in the last 5 weeks. On Wednesday, U.S. Senator Pat Toomey explained during a hearing of the Senate Banking Committee that what caused the collapse of FTX was not crypto, but the exchange's bad behavior. Yeah, look at that. This is... wow, actual logic is flowing from somewhere. Toomey's comments were made during the crypto crash, why the FTX bubble burst, and the harm to consumers hearing of the U.S. Senate Committee on Banking, Housing, and Urban Affairs. He said, the code committed no crime. FTX and cryptocurrencies are not the same thing. FTX was opaque, centralized, and dishonest. Cryptocurrencies usually are open source, decentralized, and transparent. To those who think this episode justifies banning crypto, and I've actually heard that suggested, I'm asking to think about several other historical parallels. The 2008 financial crisis involved obvious misuse of products related to mortgages. Did we decide to ban mortgages? Of course not. Commodity brokers firm run by former New Jersey Senator John Corzine collapsed after customer funds, including U.S. dollars, were misappropriated to fill a shortfall from the firm's trading losses. Nobody suggested that the problem was with the U.S. dollar or that we should ban it. I don't know who you are, sir, but you get a golf clap from me. No idea who this man is. But yeah, it's nice to hear some actual logic, and I'm not going to lie. I wish this guy had spoken about 4.5 weeks ago when everyone was panicking. Why did you sell your crypto? FTX is not Bitcoin. How many times have I said that over the last couple of weeks? I can only assume right now, if you are here listening to my words, you are smart and logical enough, and you did not panic sell because you've heard me telling you this every single day. It's nice to hear it from an actual politician, because everyone else this entire time has just been talking about how terrible or awful or monstrous or egregious Sam Bankman-Fried is. Cool, we got it. He's a monster. He's in jail. Amazing. Wonderful. Can we move on now from the idea that FTX was this terrible thing that was crypto? It was a website, and it was a company, and still is essentially a company. The fact that anyone, I'm going to assume, no, never mind. I'll be nice. I'll say it this way. I assume that the person who or people who announced that they wanted to ban crypto, I'll be nice, probably don't use computers that often. I'm being very, very nice. So that's the logical news. Thank you, U.S. Senator Toomey, for actually having a brain. They seem very rare at these days, but I'm glad that you're there. It says, was Gary Gensler aware of the FTX fraud? It was rumored that Gary Gensler had a meeting with Sam Bankman-Fried earlier in March. Congressman Emmer asserted that the meeting's primary purpose was to persuade the SEC chairman to side with FTX regarding the terms of its regulatory framework. Probably. Nothing that was said here was wrong or illegal. For those of you who don't know how it works, you typically have to meet with the SEC if you are going to be selling or dealing in or transmitting anything that may be deemed a security by the US SEC. So you have to meet with them to make sure that you are within the actual regulatory framework. That's why they met with them regarding the terms of its regulatory framework, the SEC. You have to make sure that if you have people within the United States using your platform, that they are legally able to do so. How that would then translate into Gary Gensler being aware of FTX fraud, I'm not really sure. A lot of people are just, I think they're looking for scapegoats at this point, like trying to point the finger at someone or multiple people. Who knows? Was Gary Gensler aware of the FTX fraud? Who knows? Only Gary Gensler and people who were within that meeting know. Or maybe there was another instance. Maybe nothing happened at all. Maybe he knows of other things that are happening. Does he know about the wrongdoings of the SEC? How many times have we heard from other companies something's wrong with the SEC? Even within the cryptocurrency space, we've heard at least 15 times over the last 6 or 7 years that something seems to be terribly wrong with the SEC. Outside of the cryptocurrency space, we've heard that many other times as well. Is he aware? Probably. Who knows? You know, you can't just throw the word FTX on everything and just assume that someone else was also part of the dark evil plot of things that were happening. And also in probably one of the more popular news segments. Wait for it. Hold on. Wait. There we go. Sam Bankman-Fried is apparently trying to get bail or leave the current jail that he's in. Apparently, according to reports, the place that he's in is rat-infested and completely dirty and has a history of mistreating human beings within their space. So, yeah, this was also popular news. What can I say? I don't really know what else to really throw inside there. So, yeah, that was all the FTX news. As you see, it's a major portion still of the news, but it looks like we're slowly moving away from FTX news, which is very nice. I was hoping that by this point people would have forgotten about it, or it would be like a smaller segment of the news. We're not really hearing any more at all because I think it would be simply absorbed by the negativity in the market. Any type of upgrade or update news from any coin or anything happening, everyone seems to not want to release any type of news like that because the market probably will not react to it in a positive way. Yeah. Moving along. As always, a very special thank you to my Patreon supporters. Martin Steuer, Bodie McBoatface. There we go. Sam Ratter, Dotha Diddy, Manny Cryptos, Crypto Gambino, Auspicious Agile and Blockchain, Jamie Saad, and let's move on. Empire Queen, Roman Gaba, Bitcoin Ben Arachno, Dave the Dealer's Den, Captain Something in the Z-Way, Lay, Mo Barazi, VB Nerd 21, Lauren De Silva, Quoted Biddy, Troy Allgood, Space Case, Need a Miracle, Patrick Noster, Navarro Williams, Utopia 569, Moonman High XRP, Nostromo, John Sarson, The Animal Reader, A Bibliophobia, Adam, Graysick, Wise Night Owl, 242 to the World, Bankroll Network, Crypto Artist, Coldy 3D, Setsuna, Paxis, Jim Gardner, Jeremy Fox, minting coins, Yes to Crypto, Anytime Fitness, Monk's Corner Staff, Bake Me a Cake, Tigger Ramacho Nisa, and On Crypto with Lionel. Thank you for your support. Thank you to everyone who has left a like, who has left a comment, who has subscribed, who has written a comment to help out the algorithm. At the moment, no more than 3-4 hours ago, this is where the major dip came in. Prices were already trending downwards. As you can see, the same exact swoop is taking place on every single coin. But for some reason, a couple of hours ago, that was the major fall. I assume that was from the opening of the, what do you call it? From the Asian markets. They probably went down on the anticipation that the American futures are down, and therefore everything else is falling down as well. Same exact swoops all over the place. Quite fascinating to be around during this time of cryptocurrency history. OKB, which makes no sense, is the number 11 coin and has $33 million worth of trading volume. For those of you who don't know, that's nothing. It should be about 10 times that, because this means that if you have a couple $1,000,000, you can influence the price and move it up. Something's wrong there. It should not be the number 11 coin in a multi-billion dollar, an $847 billion market. Something's not right there. Every other coin is down, basically previously to where we were before. Prices don't look that dramatically bad. It's more like we were here 8 days ago, if you kind of want to say it that way. Anything bucking the trend? Nope, not much. Alrighty. I hope you all enjoyed. I hope you all have a great Friday, great morning, great afternoon, great evening, wherever you are, wherever you might be. I do hope it's absolutely incredible. Thank you all once again for watching, listening, commenting, liking, and or supporting in your own way. And I will most certainly be talking to you all soon. See you.